The financial system has seen its fragility appear in September 2019. The repo crisis was covered up, but ultimately, for those paying attention, this should have been a signal. The Fed can't actually prevent a crisis. It's the perception that they can that calms the market. But if the Fed is unable to convince the market of that, the crutch will be pulled from under them. Not good. You came here for the truth, so let me unveil that for you. We live in a fictional world. There's so much media out there today which simply exists to hide the truth. I mean, think about how crazy that is, but really that's what we've come to right now here, 2020, heading into 2021. And you have to look at all of the data as it stands. You cannot actually make sense of this the way that they present it to you. You have to take the actual facts, start to dissect them, bring them together on your own, and then you start to ask the real questions. But the majority of people won't do that, and unfortunately they are misguided throughout their entire lives. That's a nice introduction, there's no doubt about it, so let's get into the real news. I wanted to start with this. SEC charges Robinhood Financial with misleading customers about revenue sources and failing to satisfy duty of best execution. I had brought you this information previously when it was already official, but now the SEC is getting involved. I'll tell you the way it works. You've got a trader that is on Robinhood, okay? So this person is looking through and they think, I'm going to buy one share of Amazon. So they go to their Robinhood account and they buy one share of Amazon. But prior to that actually happening, this information is then sent to the high frequency traders, namely Citadel, who is the one most involved here. And what they actually do is see that these trades are coming through and actually buy the things based on what they see, all that data, and are able to front run each of these trades, profiting off of all of them, and they're making a hefty profit. So the actual retail trader is a minuscule amount of the total trades. But because of this process here, which I hope I didn't butcher the explanation for you, is actually creating an extra level, because those institutional traders, the high frequency trading algorithms, are boosting the effect. They're magnifying the effect because ultimately they have more money behind them and there's a lot happening there. So they see what's happening. This information is being sold by Robinhood. They're profiting off of that. That's how they can afford to charge $0 for this system. You're able to do something completely different in the system right now today. Think about it. This is something new. It's democratizing trading, as they say, but what's actually going on behind the scenes is something quite different. They're misleading customers apparently now, according to the SEC, and it is coming out. If you look into the details, I had done videos about it before, that all that information was there, but now finally the SEC is coming through. They'll get a nice slap on the wrist and they'll simply move on doing what they were doing. The number of Americans applying for unemployment benefits rose again last week to 885,000, the highest weekly total since September. This is expected, as I have noted previously. I'm not going to harp on this. We are seeing the numbers just absolutely way too high for it to be an unemployment rate of, I think it was 6.7%. It's so silly. It's so ridiculous. But here we are, and most people today actually believe it, which is crazy. I just covered the Federal Reserve's balance sheet. I think it was on yesterday's video, maybe the day before, but here's the newest update, and you could see they actually moved closer. We're getting closer to this $7.4 trillion. And every time I say these numbers, I have to sort of second guess myself, but it is really getting unrealistic. 7.362, and my goodness, it's just massive. So there was another boosting up here. You look at the breakdown of it and it's Usually, in most cases, what we see is the treasuries and the mortgages occupying the largest percentage, $120 billion per month. But it really all depends on what's happening with the maturities of different assets and so on, and what's happening there with all their other programs, how much usage they were getting, and so on. The balance sheet did expand rather rapidly earlier this year, but now we are seeing it at, I still want to call it a rapid level, but compared to where it was previously, it's just going up slowly and steadily. I am definitely getting mixed signals about this, but I know that for most major cities around, I'm talking about the big cities, this is generally the case. Hardly anyone is actually inside Wall Street's big office towers. A study of mobile phones found foot traffic inside New York City's financial districts declining after a steady rise during the summer. So things have gone back, as you might have heard from people in the industry, if you know anybody there, work in the industry, that there were some people going back. So of course you had earlier, let's say March time frame, where the amount of people working in the buildings really dropped off, and then this started to pick up somewhat during the summer, and now that essentially dropped back down. Everybody's going to work from home again. It all depends on where you are, depends on your actual role and so on. But in the financial industry, this is tending to be a sort of the standard, it seems. So what we're looking at here is something that's been for many different cities, big cities, as I said. But let me know where you are and what you're seeing, because I tend to see some individuals completely disagreeing, saying, no, this is not true, why are you saying this, and so on. And others are saying, well, it's clearly obvious, this is happening all over the place. So I want to hear from you, and we have to share that information between us. Manhattan hotels, there are a few signs of the festive fervor that typically around this time of year would be there. There's no doubt about it. But in this quote, we don't expect business volume to exceed 20%. General manager at the Pierre across Fifth Avenue from Central Park. This seems to be the most anyone can do on average. And I've noted this, so many different companies are dealing with this right now, whether it's in the travel industry, hospitality, restaurants are taking a hit, obviously. Even those areas that had reopened, the point that I see all the time is, well, if you would reopen, then everything would be okay. But even in the areas where there have been reopenings, the stores, the restaurants, these industries here have still taken a hit. So, this isn't going to return back to normal anytime soon. This is really an economic impact that was just unable to be fixed, resolved by simply handing out a $1,200 paycheck to everybody. It's just completely overwhelming. There's no other way to put it. Now they give you more details in here, but I talk about this a lot, so I want to move on. Some of the companies today have sincerely been able to benefit from what's happening, as they've seen a rush of new clientele coming in. People that would have never been buying from them before are getting in. One of those now is DoorDash. People not going to the restaurants, and they're thinking, well, I still want to order some food, so I'll get it from the takeout. But right now, DoorDash had actually declined a little bit. I think it was like 2-point-something% or so. And that's coming off of a huge rush during their IPO. But according to this one company, they said that this is the most ridiculous IPO, and said that it's worth a fraction of its current price. You compare it to its peers, it is way, way higher in terms of what they actually say they're earning. These companies actually don't have a plan in terms of how they intend on becoming profitable, but that's not important today. All that's important is that they're part of the new economy, so put your money into the system. To me, this was very interesting, and it's talking about the way that people have been migrating based on the fact that they're working from home. The thought is, why should a person that's living in a place that's extremely cheap be getting paid the same as an individual living in, let's say, San Francisco or New York? So the pay may actually get cut if that person decides to move away. Now, that hasn't necessarily been a widespread thing, but that's the discussion today, to talk about a company named Redfin, which you may be aware of. And I just think it's interesting to see if this actually does happen. Here, they're just in the middle of this article. After that, there was a big group of mid-tier areas. Anyone who moved from an expensive place to one of these would get a 10 to 15% reduction in cash compensation, salary plus their bonus, as well as 10% to 20% less in stock. They included Austin, Baltimore, Chicago, Denver, Houston, Miami, and Philly, and they go on. I think it's something that we need to note. For a lot of people, they have done this. They have relocated, but I don't think they were necessarily prepared for a cut in their wage. So we'll see what happens. I'll keep you updated. This was a Bloomberg article that just kind of summarized what's been happening recently. And I touched on this before, but Switzerland, they had discussed actually manipulating their currency. The US came in, said, oh, they're a currency manipulator. We must label them that. Vietnam as well. But look at this. Switzerland renewed its pledge to use currency interventions to counter upward pressure on the franc just a day after being censured by the US for that practice. Now, what do you think they're going to do? Are they going to respond to it? No, they just do what every other central bank is doing. They print money, they devalue their currency. Why is that currency manipulation in one country but it's not in the other? Every country is doing that today. It's ridiculous. It's so ridiculous, but here we are. Anyway, there's the BOJ doing more of their measures is fantastic. They're talking about here, the one I just talked about, the wage cuts potentially coming from work from home. And they're also talking about the relations between Beijing and Canberra, and something that I think that isn't getting enough attention, because these two are excellent trading partners. Typically, there's a lot moving back and forth, and this would really be a negative for the exports of Australia. I'm telling you right now. So we have to hope that this doesn't turn into another back and forth like we have with the US and China, and that's not a good thing for either side. CocaCola said it's cutting 2,200 jobs globally, including 1,200 in the United States. And apparently at the start of the year, they had 86,000 employees. Their reductions amount to roughly 12% of the company's US workforce. They go on and give some more numbers. I thought it was something to think about, simply because, people are probably still drinking Coke. They still want to consume it, but they're not having it because they're not going to the bars, they're not going to the restaurants, they're not going to the movie theater in a place where they might have increased consumption of these products. That's something that maybe most didn't think of. If they're having it at home, they're going to have what they normally have there, instead of saying, oh, you know what, maybe I'll have a Coke. So they don't have that necessary option because they're consuming what they have in their house and so on. So just something to think about, not just for Coca-Cola, but think about how many other companies are probably in the same position as them. That's all for this video. If you found it informative, hit that thumbs up button. When you do, you are supporting me. I want to thank you for that. If you want to learn about e-commerce, you are interested in what's going on with this entire industry that is expanding so rapidly, you can learn for free at theamazongps.com. The financial system, it's complex, it's convoluted, it's difficult to understand simply because they made it that way to keep you from knowing the truth. That's why I broke it all down in these two books. If you want to check them out, not necessarily for yourself, maybe a family member, maybe a friend, a coworker that is interested in this type of information, definitely take a look at the link in the description if you want the audiobook instead, themoneygps.com. But hold on, hang on. Have you seen this video? If not, you definitely want to check it out. So much detail, and only a few people have watched it. The views are declining rapidly, and that's all right. I just want to make sure that you have seen it. Click on it. I'll see you there.